Welcome to our podcast on anticipating the alpha opportunity in small caps. I'm Philip DeSantis of Westwood, and joining us today is Bill Costello, Senior Vice President and Portfolio Manager on Westwood's small cap value strategy. This podcast will be of particular interest to investors who are seeking ways to generate alpha within small cap, but with a greater degree of emphasis on managing downside risk. Bill, let's start off by talking about Westwood's approach to investing in small cap, and particularly the type of companies that you're interested in owning in the portfolio.
Absolutely. Thank you for having me. If you look at our small cap portfolio, it's a high conviction portfolio. We run a limited number of names, and it's concentrated in the best ideas within the firm that have the best risk-reward characteristics. We focus on a quality value approach where we look for high quality companies, good balance sheets, and that are selling at a discount, or the value proposition that we have is the discounted valuation to the intrinsic value, which is based on real earnings and real free cash flow. It allows us to focus on an asymmetric return where the upside or the reward is dramatically greater than the downside.
So far in 2018, we have seen some macroeconomic changes affect the current backdrop for small caps. We've seen interest rates rise and the likeliness of higher inflation into the future. How are you positioning the portfolio today in the pursuit of alpha while emphasizing greater downside risk in the portfolio, given the changes at bay?
Well, inflation and interest rates have been benign for many years since the financial crisis. And that is obviously changing, to your point. We're going to a normalization of interest rates, and inflation has picked up a bit. We think that in the small cap land in general, there's a lot of companies out there that have very high debt levels, a lot of it's floating, and it will need to be refinanced in the next few years. So if you look at our portfolio, one of the things we do is have companies with much lower leverage than the index, which is a higher quality company. And we also focus on companies where they have pricing power, so the inflation that's through the system, they will be able to pass on to their customers and not have to eat it and go into and have margin degradation.
When you look at the Russell 2000 today, there are 36% of the companies in the index that are not profitable. One, what does this say about the quality of companies in the index? And two, how will higher borrowing costs affect the profitability profile of these companies going forward?
I think it's an astounding fact that so many of the companies are unprofitable. If you look across our concentrated portfolio, all the companies that we own make money and generate good returns. That's one of the things we focus on. We think that the unprofitable companies in the Russell 2000 are detrimental, and with the interest rate environment where it's going, high leverage companies are, in harm's way, if you will. And we think our portfolio is positioned much better than that in the profitable companies and the companies with the much better balance sheets that generate real free cash flow.
Bill, October was not a kind month to investors in the market. When you look at the overall sell-off, what areas did you see a disproportionate sell-off, and how do you use that opportunity to capture opportunities in the portfolio?
October was a very challenging and difficult month, and obviously the small caps in general underperformed the market. A lot of it had to do, or a lot of the underperformance was in some of the cyclical areas, whether it was energy, materials, home building, that type of investment. So we were overweight in a few of those, but what we have done, because we believe in the housing cycle and the stocks that we own specifically, we've typically been buying the stocks that have been going down. So we're using the weakness to add to our positions, because we think coming out of that cyclical fear and into 2019, given a good economic backdrop, that these stocks will outperform.
Well, Bill, thank you for taking the time to chat with us today about the developments in small cap. If you'd like more information on Westwood's approach to small cap investing, please visit westwoodgroup.com. Past performance is no guarantee of future results.